Well, it was a very good session for the market, which came into the week somewhat wobbly from the recent trend of failed rallies. Now, on that note, I have to point out that while all the S&P 500 sectors were higher, the best performing was utilities, and that sort of underscores the big degree of anxiety over a whole bunch of issues that remain for this market. Energy was also compelling because crude oil actually pulled back while most crude oil-related stocks were higher. Maybe they're in some sort of a catch-up phase. Maybe it's finally starting to happen. Now, the biggest winner was the S&P, in the S&P was the materials. They were driven by J.B. Hunt. And this is interesting because a week ago, the stock fetched a sell rating at Goldman Sachs. Nonetheless, today it soared more than 6% on strong volume and pricing power in its largest business, its intermodal business. Revenues there up 14%, operating income up 20%, their load volume up 6%, revenue per load up 8%. That is phenomenal stuff. And keep in mind, this is very important because intermodal is a great proxy for the overall economy. Also today, retail investors staying the course. Charles Schwab reporting results. They beat the street, reflecting individual investors not dissuaded by political headlines, wild gyrations, or Wall Street's fear tactics. 443,000 new accounts, the highest quarterly level in 18 years for the company. After the bell, Netflix posted results that beat the street on revenue and earnings, but it was really the critical subscriber growth that Wall Street was most concerned about. And on that account, management blew away the street. Almost 2 million U.S. subscribers, 1.5 million was the estimate. Internationally, 5.46 million. The street was looking for slightly more than 5 million. By the way, strong guidance for the current quarter on revenue, earnings, domestic and international subs, all above Wall Street consensus. Let's discuss the message of the economy and the rest of the earnings season. Joining me now, Keith Fitz-Gerald, Chief Strategist at Money Map Press, and back with us, Kevin Kelly. Keith, let me start with you. I love the news from J.B. Hunt. It follows, by the way, reports that the first 3 months of this year, the biggest quarter in history for orders of Class 8 trucks. I think that's the perfect proxy for this economy.
Absolutely, because it tells you not only that money's on the move, but stuff is on the move. And you got to have stuff to have growth. So to me, that's a great win-win, truly in the classic sense of the term. What
do you make of so far? I know it's early, but what are you sensing with this earnings season and some of the numbers we're seeing after the close?
I think that, earnings are always like betting on a horse race after you know the results. However, I'll take them. The average S&P growth looks for about 17%. Certain sectors are going to be a lot higher than that. I'm very encouraged by what I've seen in BlackRock. I'm very encouraged by what I've seen in materials. I'm very encouraged by what I've seen in the big financials. So to me, it tells me that the economy is for real. It tells me that money's on the move, and it tells me that growth is continuing.
Netflix up about $17-20 in the after hours. I'm not sure how the conference call is going to go. There's room there for them to even increase their prices, I would suspect. So perhaps this rally starts to continue.
Yeah, I think one of the things when you look at Netflix is how are they going to compete against Disney, which is looking to end their content licensing to Netflix starting next year, as well as come up with a competitor. So I think that's one of the biggest issues that you're going to have, because they're going to need to continuously create their own content. They're looking to spend $8 billion next year, especially on the global scale, because they're already about 50% here in the United States. So that is going to be a big question mark for them going forward.
When does it impact the stock, or do you think it will start to impact the stock though anytime soon? That big question mark.
Yeah, I think it'll impact the stock next year when you start to see Disney gain traction, should they gain traction, because this is always about growth in subscribers, and you've seen that play out with the recent sub deals, whether it's with T-Mobile or you're going to see some sub deals come through next quarter, which could be good for the stock, including Comcast.
Right, bundling they already said was pretty good with Comcast and others. Real quick on the overall economy and markets, where are you here?
Yeah, I think we're going to do exceptionally well, especially because you're starting to see GDP numbers tick up. That's going to be good. Look at the hotel companies, right? You saw H&A actually had to sell over $6 billion of its Hilton stock. Hilton bought $1.2 billion of that back at $73. It closed today at $80. 70% is domestically here. So if you want to play off the domestic economy, we just talked transports. Look at small businesses and large businesses starting to spend it on travel for their business purposes.
Right. Great stuff. Real quick, Keith, your assessment. I know it's early on. You mentioned BlackRock. It was up big Friday, gave back those gains, though. How do you think we'll come out of this earnings season knowing how important guidance is going to be?
I think they're going to do very well. They're one of the world's largest asset managers. I think the CEO has got his head screwed on straight. He's leaning into parts of the world where there's conflict, i.e. China, and that's lots of growth, lots of money on the move. Again, never mind the politics. The CEOs understand how to make a buck. The politicians don't.
All right, great point. I may have to borrow that one a couple of times. Thanks a lot, Keith.